you ever wondered if you missed the boat on a massive investment? Many people feel that way about Nvidia. The company's stock has soared, making it a tech titan in the face of the AI revolution. Now, investors are asking, can Nvidia's stock hit $1,000 per share by 2030? This isn't just a number, it's a bet on a future transformed by AI. Bulls see Nvidia's chips as the backbone of everything from self-driving cars to medical breakthroughs, believing $1,000 is just the start. Bears, however, warn that the hype may have pushed Nvidia's valuation into bubble territory, with fierce competition and industry cycles threatening a fall. The debate is fierce. Is this just the beginning, or has the best already passed? In this video, we'll break down Nvidia's market position, financial health, and the forces that could drive or derail its journey to 2030. We'll weigh expert predictions, explore the risks, and help you decide if Nvidia is the right investment for your future. By the end, you'll have a clearer picture of whether Nvidia's AI dream is just beginning or already peaking. As of July 2025, Nvidia is among the world's most valuable companies, with its stock at $130 after a 10-for-1 split. Its market cap has soared past $3 trillion, joining the ranks of Microsoft and Apple. This valuation reflects massive investor confidence, fueled by Nvidia's leadership in the AI revolution. Nvidia's forward price-to-earnings ratio is about 45, more than double the market average, signaling sky-high growth expectations. Its price-to-sales ratio is around 20, far above mature tech peers, showing investors are betting on future AI dominance. Just a few years ago, Nvidia was known for gaming graphics cards. Now its GPUs are the engine of generative AI, sending demand and its stock into overdrive. The company's meteoric rise has been stunning, but the question remains, can this momentum last? Is Nvidia's valuation justified by future growth, or is it a sign of a market bubble? That's what we'll explore next. Nvidia's dominance is no accident. It's the result of years of innovation and strategic investment. Its GPUs are the gold standard for AI, handling thousands of tasks in parallel, perfect for training massive AI models. This technical edge has given Nvidia over 80% of the data center AI chip market, making it the go-to for cloud giants and startups alike. Nvidia's gross margins often top 75%, a rarity in hardware thanks to its powerful ecosystem. The secret weapon? CUDA, a software platform that locks in millions of developers and makes switching costly for competitors. Wall Street is overwhelmingly bullish, with most analysts rating Nvidia a buy, citing its consistent outperformance and upcoming product cycles. The company's flywheel effect, best hardware attracts developers who build great software, which in turn boosts hardware sales, creates a moat that's tough to breach. Rivals aren't just competing with a chip, they're up against an entire ecosystem. This entrenched leadership is why so many believe Nvidia's growth story is far from over. But can it keep this edge as the AI race heats up? The bull case for Nvidia is simple. The AI revolution is just starting, and Nvidia is selling the picks and shovels. Every industry will need AI, driving relentless demand for Nvidia's products and locking in customers through CUDA and constant innovation. Bulls see Nvidia's rapid chip releases and deep developer ecosystem as an unbeatable moat, but the bear case is just as strong. With a sky-high valuation, any stumble, slower growth, missed targets, or delays could send the stock tumbling. Competition is intensifying. AMD, Google, Amazon, and Microsoft are all developing rival chips, threatening Nvidia's margins and market share. Bears argue the AI chip market will eventually become commoditized, eroding Nvidia's pricing power. The question, can Nvidia stay ahead? Or will rivals catch up and force a painful correction? The answer will shape whether Nvidia's stock soars or stumbles in the years ahead. Let's see what analysts predict for the near term. The stakes couldn't be higher. Wall Street remains optimistic about Nvidia, with most analysts expecting continued growth through 2025. The average price target is $150 per share, reflecting strong demand for AI chips and new product launches. Bulls see potential for $180 or even $200 if Nvidia keeps beating expectations and AI adoption accelerates. Bears, however, warn that much of the good news is already priced in, with some targets as low as $110, $120. Macroeconomic risks and rising competition could slow growth or compress Nvidia's lofty valuation. Ultimately, Nvidia's quarterly earnings and data center revenue will be the key metrics to watch. Any sign of slowing growth could quickly shift sentiment. Looking to 2026, the outlook for Nvidia gets more complicated. Bulls believe AI will expand into new markets, automotive, healthcare, robotics, opening up huge revenue streams. If Nvidia captures these edge markets and keeps innovating, analysts see the stock reaching $200, $250 by late 2026. This requires 30–40% annual growth and continued dominance in both cloud and enterprise AI. But risks are rising. AMD, Intel, and custom chips from Google, Amazon, and Microsoft are all gunning for Nvidia's crown. If these rivals succeed, Nvidia's growth could slow, with bearish forecasts putting the stock at $140, $160. The real test? Can Nvidia fend off competition and keep its edge as AI adoption spreads? The next 2 years will be critical. The outcome will shape Nvidia's long-term trajectory. For Nvidia to hit $1,000 by 2030, it needs to grow more than sevenfold in 5 years, an average of 40% per year. This would require AI to become truly ubiquitous, with Nvidia evolving from hardware supplier to full-stack AI platform. If the total AI market tops $1 trillion and Nvidia captures 40–50%, annual revenue could reach $400, $500 billion. Maintaining high margins and a PE of 30 could make $1,000 per share possible. But the risks are huge. Technological disruption, new chip architectures, and geopolitical tensions could all derail growth. History is full of tech giants unseated by innovation. A more moderate scenario puts Nvidia at $400, $600 by 2030. Still a massive return, but with slower growth and tougher competition. In a bearish case, the stock might only reach $250, $300 if rivals erode its lead or the AI market disappoints. The path to $1,000 is possible, but far from guaranteed. Investors need to weigh both the dream and the danger. So should you invest in Nvidia? It depends on your goals, risk tolerance, and belief in the AI future. For long-term growth-oriented investors, Nvidia is a high-risk, high-reward bet on AI transforming the world. The key is to focus on the long-term thesis. Is AI adoption growing? Is Nvidia staying ahead? Is it expanding into new markets? But don't ignore the risks. Nvidia's valuation is sky-high and competition is fierce. Conservative investors may want to look elsewhere, as Nvidia's volatility and tiny dividend make it unsuitable for those seeking stability or income. Ultimately, Nvidia sits at the heart of the AI revolution, but the journey to $1,000 will be volatile and uncertain. Balance optimism with realism, and never invest more than you can afford to lose. Whether Nvidia hits $1,000 or not, its story will be one of the most important in tech over the next 5 years.